Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Nvidia's CEO says he anticipates getting the first batch of US licenses to export H20 AI chips to China very soon. Plus more from Crypto Week on the Hill after Trump says the House will pass the Genius Act Stablecoin Bill today. And Elon Musk's xAI is in discussions to lease data center capacity in Saudi Arabia. We bring you the Bloomberg exclusive. Good morning. Let's get right to markets, and we are very focused right now on the chip sector. ASML, these are the Dutch shares trading in Amsterdam of the world's leading chip equipment maker or chip making equipment maker. The story is really clear. The vision they've given us for 2026, they are not holding to that in terms of growth or a year of growth. But what really spooked the markets was a comment from the CFO about how right now chip makers and customers are very worried about tariffs. We'll go deeper later in the hour. Then you have Nvidia. So actually Nvidia was kind of not doing much this morning. We know that Jensen Wong is in China talking up the success of being able to sell in a limited way some AI chips back into that market. Over the course of 3 days, we had a big gain yesterday, pushing the market cap well beyond $4 trillion. We're giving some of that back this morning. The anxiety in this Wednesday session is slightly linked to, let's say, the jitters from ASML. Anyway, Jensen Wong's been talking up a storm. Listen to this.
Some of the things that we wrote off might be harder to recover, but most of the things that we put on reserve will not be scrapped permanently, was not scrapped permanently. And so we'll compare what customers would like to buy now versus the inventory that we have, and then we can figure that out. It's probably not 100%, but it's not 0% either.
Let's get more on Nvidia and the relaxation of some of those chip curves. Bloomberg's Mike Shepard joins us out of DC, and Jensen Wong's appeared a number of times, actually, in the last 12 to 24 hours in Beijing, in China. And let's say he's basking a little bit in what is a big win for him and a big win for the company.
Well, that's fair to say, because this really was a big turnabout by the Trump administration in basically lifting these export curbs on the H20 that it had imposed just back in April. And much to Nvidia's chagrin, it prompted the company to take a $4.5 billion write-down in the previous quarter, and it had been looking at losses of perhaps as much as $8 billion in sales for the current quarter. So this is a potentially big gain, and Jensen Wong is saying that he is expecting those licenses very soon, Ed, although he didn't give an exact timeline. And there's still some unanswered questions about that, too, the scope of it. We don't know exactly what this backlog of orders that Jensen is saying are still on the books that they can fulfill very quickly once they get the licenses. And it's also not clear whether the permission that the U.S. government now is signaling that it will start giving extends beyond the inventory that Jensen was talking about that have been held up by the restrictions that were imposed. Likewise, we don't know if this will be a rubber stamp process by the U.S. In other words, will it be quick, as Jensen is suggesting, or will there be some bureaucratic tangles here? So there are some questions about how far this goes and whether this might extend to future chips that Nvidia may try to sell there.
Bureaucratic tangles. There's also the political entanglement as well. There's been a lot of headlines, I think, in the last 24 hours with Jensen Wong in the center of them because he is in China. And there's a timing question because he met with the president of the United States last week. Do we use Nvidia as any kind of sign that the relationship between the two countries, the United States and China, is evolving or changing in real time as well?
You know, it really does fit into the broader picture of how U.S.-China relations are really evolving fairly quickly. Since Liberation Day, when Donald Trump imposed, these eye-watering tariffs on the world's second largest economy, really prompting a reckoning between Washington and Beijing and forcing negotiators from both sides to sit down and really hash it out over trade. They didn't get too far into the weeds, but they did address some of the key issues, and they included export controls. The U.S. has been concerned that China had been holding back on sales of rare earths elements to American customers. And likewise, Beijing have been complaining about export controls, like the ones that we are talking about applying to the H20 chip, but also to chip design software and other elements. So we got a sense that there has been a little bit of a quid pro quo, something that Treasury Secretary Scott Bessent acknowledged during his interview with our colleague Anne-Marie Hordern yesterday morning, and something that we are seeing fitting into this broader pattern of perhaps a little bit more rapprochement. Secretary of State Marco Rubio has been meeting with his Chinese counterparts to try to set the stage for a summit between President Donald Trump and his counterpart, Chinese President Xi Jinping, sometime before the end of the year. And likewise, Trump has also been signaling a softer tone. He's saying that he will fight China in a friendly fashion. And likewise, according to reporting from our colleagues Jenny Leonard and Mackenzie Hawkins inside the room, inside those meetings at the White House, Trump is one of the least hawkish voices when it comes to China.
Bloomberg's Mike Shepard in Washington, D.C. Thank you very much. Let's stick with the semiconductor space broadly. This is shares of ASML, right? The world's most important leading edge maker of lithography machines, EUV lithography. They're used to manufacture chips. And what has happened this morning is the company's walked back its forecast for next year, 2026. Let's get out to London and Bloomberg's Henry Wren. That is a part of the story, right? So in that European session, the stock's off lows, but down more than 10%, Henry. The other part was the CFO saying, our customers are really worried about tariffs right now. Give us the summary.
Yes, yes, indeed. So usually every quarter when ASML trades, it trades about its orders intake number. This quarter, the order intake number is satisfactory. It beat estimates. However, one line in this press release really caught traders' attention, and that's CEO saying that although the company is still preparing for growth for 2026, the company really couldn't confirm that at this stage, because that contrasted with the company's messaging about 3 months ago, saying that based on its client conversations at that time, 2026 was still expected to be a year of growth. So this really dampens the sentiment, as you mentioned. We see sell downs in some other chip equipment companies today as well, including Applied Materials, KLA in the US, as well as ASMI, BE Semiconductor as well in the Netherlands.
What about the quarter gone? I mean, is there any sense of how the health of the business is right now?
Yes, so let's focus on the EUV first, because that's the most important growth factor for the company. And according to the order intake that we've been seeing in the past quarter, it does seem that TSMC has been putting into more orders, which is ASML's most important customer. However, for many other customers, the uncertainty level is on the rise. We talked about, the Trump administration is backtracking many of its eye-watering tariffs. However, based on the conversations ASML has with many of its clients, it does seem that the uncertainty level is on the rise rather than on the decline. ASML explained that it's because of two reasons. On the direct side, you still have this Section 232 investigation going on the U.S., which means the tariffs imposed to chips and chip-making equipment is still unknown. And on the other hand, you have this tariffs impact on the economy, which many chip makers are more concerned about. So on the direct and indirect side, the company is getting more cautious. Its customers are getting more cautious. So that's probably why you see the company walking back its guidance a bit today.
Bloomberg's Henry Wren out of London. Thank you very much. Let's get to the chip and AI sectors in greater depth with an investor, Jay Hatfield, CEO, CIO of Infrastructure Capital Advisors. It's hard to know whether to start on trade and policy or the politics of the day between America and China, or the idiosyncratic that Henry was going through. But right now, tariff seems to connect all of those things. What are you seeing across the technology sector in how investors are responding to tariffs, but also how the companies themselves are communicating the impact?
Mm-hmm. Thanks, Ed. It's great to be back on. Well, the way we look at tariffs is they're actually very positive for the U.S. and very negative for the rest of the world. And you're seeing that today with ASML. But U.S. companies are mostly, except maybe Apple, mostly unaffected by the tariffs. A lot of them have local manufacturing. So you continue to see tech stocks lead the market. But what I think most people are missing is the revenue benefit to the U.S. So we're forecasting $300 billion of revenue from tariffs, which is really the run rate right now. And we're also forecasting that the budget deficit declines next year to 1.4 trillion only. That's only 4.5% of GDP. So nobody else is really looking at those numbers. It is good for the U.S. to collect revenue, pay down or have less of a deficit, which ultimately will be invested and help the economy.
Jay, I think the top story over the course of several days has been Nvidia, the world's most valuable company, now being more free in a limited way to sell chips back into China. It's a headline and it's a single company, but what does that signal to you on the policy side about how America will continue to trade with China?
Well, I think what you're seeing is that the Trump administration, notwithstanding the tariffs, which can be negative for a lot of companies, and trade restrictions, which hurt Nvidia 3 or 4 months ago, is that they are pro-business. And if you lobby the administration, they are open to changing policy. So ultimately, that's going to support the stock market. It's going to be bullish for tech companies. So they're just way more practical than the prior administration and way more pro-business.
You track a series of economic indicators, right? What is your projection on the net effect of this administration's policy? Do you see growth near, medium term, long term? Or what do you think we're being set up for going forward on the fiscal side?
Well, it's fairly complicated because tariffs are negative for the economy in the very short run because you just take, it's really like a sales tax, so you take buying power away from consumers. But the real issue is the Fed is misanalyzing tariffs. They're not treating them as one time. They're sticking with their archaic expectations theory of inflation that tariffs might cause expectations and spiral out of control, which we think is no longer the case. No longer the case.
Sorry to interrupt you. Let me ask you this. That's your view on this current Fed administration, right? I have to acknowledge that in the markets right now, there is movement across assets on the reports and speculation about what the administration may or may not do vis-a-vis Fed Chairman Powell, right? I think we see that in the markets. What do you make of that, a potential change? And I'd note for our audience, right, this is Bloomberg Tech. We talk about tech companies that are valued on their future earnings. So rates impact that equation, right? Take it from there.
Well, we actually have a differentiated view that if, in fact, the Fed chair gets replaced, of course, the stock market probably would react negatively. That would just be a buying opportunity for a couple of reasons. First of all, the Powell Fed has been tremendously behind the curve. They use a flawed CPI, so they're always about 2 years behind the curve. But also, a new Fed chair is not going to have super loose monetary policy. They just have normal monetary policy. And they have to deal with the existing board, which has the core board has 4 Democrats on it. So they're not going to be all powerful. They're not going to lower rates too quickly. And it's important to note that rates are ultra tight now. So we really, really need a cut.
That was in the context of media reports on the president's consideration of whether or not he can or will fire Fed Chair Jay Powell. Bloomberg's not verified that reporting, but as we discussed, Jay, we see it in the markets. Jay Hatfield of Infrastructure Capital Advisors, great to have you back on the show. Thank you. Now, coming up, Mark Zuckerberg is set to face off against Meta shareholders in a trial over the company's handling of user data. We're going to get the details next. This is Bloomberg Tech. Meta today is in court in Delaware over allegations from shareholders related to the fallout from the Cambridge Analytica data mining scandal. I want to go to Bloomberg's Riley Griffin, who's here in SF. Okay, so the trial's underway. What is the context and the basis of the trial? Who's involved? What do we need to know?
And this is a case that is not just about privacy, but it is about power. Mark Zuckerberg is expected to testify alongside former COO Sheryl Sandberg and board members about the Cambridge Analytica scandal, which has had quite a long shadow over Meta. But in this case, Meta is not a defendant. Actually, just the executives and the board members are, and the shareholders in this case are looking to hold them financially accountable for the fallout of that scandal.
Okay, history is important here. Like earlier in my career, Cambridge Analytica scandal was a big story. What are the basics of it that our audience who may or may not know need to know?
Yes. Years ago, this was a case where Cambridge Analytica, a firm, had harvested data of millions of Facebook users inappropriately. This firm had ties to political operations, the Trump campaign, and ultimately Facebook had to pay a multi-billion-dollar settlement to the FTC for that data breach.
Okay, what are the shareholders actually accusing the specific executives of then? If it's not the company that's a defendant and it's those key names, what is it the shareholders want?
Yeah, negligence, a lack of oversight over the company's actions during that time. Now, remember, Mark Zuckerberg has total control over the company via his voting power. He has the majority control over votes and essentially can set company direction. And shareholders here are saying that these executives didn't do their appropriate duty, didn't follow FTC orders, and allowed this breach to happen knowing that there were certain risks at hand.
I feel like there is a lot of litigation going on with Meta. It's hard to distinguish and work out all these different paths. This one's happening in Delaware. Why is it happening now? Again, like I reflect that the Cambridge Analytica scandal was more than a decade ago, something like that.
Yeah, so it's great that you bring up Delaware because what makes this an unprecedented case is it's the first time we're seeing a CEO and board members actually go to court. Usually these kinds of things are settled or negotiated behind closed doors. And we're actually seeing this trial take place in Delaware. And it really has ramifications for all companies out there, whether or not Mark Zuckerberg and other executives are having to pay billions in dollars for this scandal. Now, one thing we need to remember is this is a really hard case to win. These Caremark claims, the battle is uphill, and it could set the direction for whether Meta ultimately reincorporates outside of Delaware in the future.
So Riley Griffin of Bloomberg News and Bloomberg Tech, you're kind of like 6 months into this beat of covering Meta, and so much has happened in the first half of the year. What I would like to get from you is Mark Zuckerberg himself. Like, he actually does appear and gives testimony in the context of litigation, or if it is a political hearing, something like that, he often will stand up and speak, right?
Yes, and that's an evolution of his career. What we've learned from our reporting and my reporting over the last 6 months has been that Mark Zuckerberg really wants to take legal fights to court now. This is no longer a time where he wants to just settle, but he wants to set the precedent that Meta can win these cases. And in this case, he can.
You wrote an extensive and deep piece in Business Week about the kind of magnification of Mark Zuckerberg. I really encourage the audience to go out and read it. But you mentioned that the evolution of his career. There's also been an evolution of him, personally, politically. Could you summarize what you learned through that?
No apologies. This is something
from him. That's his vibe.
That is his vibe. He has said this publicly. He said it privately. He is done apologizing for scandals of the past and ready to move on and really dominate the space. And that demands winning, whether it's on the legal front or politically speaking.
So the big news this week in Meta's world has been this commitment for massive, massive scale data center. You know, I broke the story this morning. We're going to do it later in the show that xAI is looking at Saudi Arabia because you need the capital, the space, the energy. But what Meta's doing, you know, the image that they give is it could cover Manhattan, the scale of what they want to do. Summarize it as best you can and what our read on it was.
Yeah, so hundreds of billions of dollars. That's how much Meta is expecting to spend on this AI race to beat out the competition.
Over time?
Over time. Over time. We know that this year, as of the last quarter results, they're expecting to spend, you know, as much as $72 billion in capital expenditures, a lot on data centers, as you mentioned. And we're seeing $200 million pay packages for AI talent. They're poaching from OpenAI. I mean, this is a relentless race, and Meta is putting all the capital it has on hand to win it.
Bloomberg's Riley Griffin, thank you very much. Some headlines that are crossing the Bloomberg terminal. President Trump is likely to fire Fed Chair Powell, according to White House officials and Bloomberg's reporting. That could happen soon. Bloomberg also reporting that Trump spoke to lawmakers on Tuesday about whether or not to oust Powell. I'd note some of the market reaction. We're showing the Bloomberg US dollar spot index, the dollar spot index raising gains after that report, also seeing treasuries pair gains after earlier reports. We'll continue to bring you what we know throughout the day. All right, coming up, we're going to discuss the fate of the Genius Act Stablecoin Bill. That's with Kavita Gupta from the Delta Blockchain Fund. This is Bloomberg Tech. Crypto stocks rising along with Bitcoin after President Trump said the House of Representatives will pass the Genius Act stablecoin bill today. This after a procedural vote failed yesterday. I want to get out to Kavita Gupta, general partner at the Delta Blockchain Fund. There is some political wrangling going on, but it looks like the Genius Act stablecoin bill moves forward. Why is it important it does so?
Hi, Ed. I mean, Genius Act is basically putting a basic structure of what stablecoins should have already been a long time back. The stablecoin bills or the Genius Act actually provides any companies who are doing stablecoins the rules and regulations around how to really release them, how much collateral do you want, what sort of underlying transparency and accountability associated with it should be there. And I think those are the things which companies like Circle were always watching. But putting a standard structure would help a lot of fintech companies, like whether it's Square, Block, or a bunch of other bunch of other financial companies to actually release it in a right way.
We've been asking ourselves, when this bill passes, what happens next? And the hope from your industry, as I understand it, is that there's just going to be much wider use of dollar-denominated digital tokens, dollarization, as David Sachs would call it, and has done here on this program. Yeah. Is that what you're hoping for?
Yeah, I'm hoping for three different results. First, we have to understand that more stablecoin, especially in US denominated, is going to have adoption. You are actually creating a soft power around US dollar. Beyond the $1 trillion deficit, which we already had, or the debt, you are actually making a more US-pegged economy in the world, which is really big for US dollars and the United States governments. And I think that's why President Trump is really pushing for it. Secondly, it does legitimate everything around crypto with respect to USD-denominated currency. It will give a big hype for the prices in Bitcoin, Ethereum, and all the other stuff which we are looking at denominated in USD. So that's a very big one. And third and most important is for a normal, regular customer, very Web2 customer, as we say, would actually start understanding crypto adoption using stablecoin and would be a very comfortable segue into crypto. So I do feel like not only for the industry, but as a country, it's a very big win.
Okay, so House vote on the Genius Act stablecoin bill today. We'll track it. We'll bring you the latest when we get it. Kavita Gupta from the Delta Blockchain Fund, thank you very much. Now, coming up, fueling the growing AI race, we look towards the future of energy as data center demand sees no signs of slowing down. Data center is everywhere at the moment. So much more to discuss. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Let's get back to the story from earlier in the hour. Bloomberg reporting, citing a White House official, that President Trump is likely to fire Federal Reserve Chairman Jay Powell very soon. The market reaction was in the US dollar, but we also saw G10 peers climb on those headlines. Bloomberg also confirming earlier reporting that yesterday the president met with GOP lawmakers to discuss whether or not he ought to oust Fed Chair Jay Powell. That's what we'll keep tracking. Markets are moving in real time. Also thinking a lot about the semiconductor space because of ASML's earnings, right? That is a big story right now. They scrapped their year of growth forecast for 2026, but the big headline that spooked investors is that the CFO is saying customers are very worried about tariffs. These are shares that were trading in Amsterdam. The market in Europe now closed, but that is a big drop, almost 11%. Those are the public markets. Let's go from public markets to private markets. A story I broke with colleagues yesterday. SpaceX is planning an insider share sale that would value the company at about $400 billion. That's according to our sources. The per share price is $212, and that's up substantially from the $185 set in the prior transaction. That was December. This deal marks a rapidly climbing value for Musk's rocket and satellite maker, which is now the most valuable private startup in the world. Sticking with Mr. Musk, Elon Musk's AI startup, xAI, is in discussions to lease data center capacity in Saudi Arabia. That's according to sources. It's all part of an effort to expand infrastructure in regions offering cheap energy but also political goodwill. I want to get out to our AI editor, Seth Figerman, who joins us on the story. Seth, this is something we reported with colleagues in Europe and in the Middle East this morning. My understanding is from sources there's one key name, which is Humane. That's who xAI is talking to. What do we need to know here?
I think this is one of the rare providers in the region that could probably get xAI, several gigawatts of capacity in the coming years. And it speaks to, I think, the scope of Elon's ambition. It was only a year or so ago that people were still scratching their heads about what he wanted to do with xAI and where it really sat in the ecosystem. Now we're looking at a company that is technically valued at around $200 billion, and expanding infrastructure at a scale that's starting to rival OpenAI and Meta, though perhaps not quite at the same level yet. Of course, what we're waiting to hear is now what's the product, what's the revenue stream, all of that makes it a big business.
Right. So in Memphis, Tennessee, you have Colossus, hyperscale data center footprint. The rest of the reporting is that, they might also be looking at the UAE. There's a relationship with G42 and Elon Musk. They might be looking at Africa. The main thing is, you just mentioned it, the product. Where is xAI at? Grok 4 was this big moment on social media, but what do we know about the model and its capabilities?
Yeah, this still feels like a company that's making more headlines for the controversies than for the capabilities of its products. That said, it does seem to be hitting benchmarks that are comparable to some of the leading providers out there, including OpenAI. But what we have not seen really from xAI yet is it play a real central role in the business and developer ecosystem. This is not a company that's partnered and done deals with a bunch of Fortune 500 brands. It's not necessarily a central tool for developers and software engineers. They are starting to implement higher price tiered products that might start to gen up revenue, but I don't know that we've really seen it prove the business case yet, but who knows where it goes in the next 6 months.
Bloomberg's Seth Figerman, thank you very much for joining us. Let's get more on the race for AI data centers. Catherine Huff, University of Illinois, Urbana-Champaign Associate Professor, somebody that has also held multiple roles in the Department of Energy across the US government. That report just there, I broke it with colleagues this morning in the Middle East. But what's interesting about it was my understanding is xAI and Musk's rationale is to look to regions where energy is cheapest, which puts a reflection on the state of play in this country as well. Would you just give us your reaction to that reporting?
Yeah, I think it makes a lot of sense, right? As power demand goes way up, you're going to need to see some balance between the cost of running these data centers with the, cost of powering them, which is going to be a huge component. A lot of AI data center companies are looking towards new energy and building new energy for the grid, like nuclear energy. I'm a nuclear engineering professor, so that's where my expertise lies. And I immediately think of countries that might build new nuclear as options for that.
The focus this week has been in Pennsylvania and Pittsburgh. And there was a commitment from one company, CoreWeave, to invest in that state in data center capacity. I just want to play you a soundbite from CoreWeave's CEO on the big picture of where he sees the need.
The broader issue, really, that has echoed around this conference, and it has been an extraordinary conference, has really been about the need to be able to build and scale the energy infrastructure of the country, to be able to build and scale the computing infrastructure for artificial intelligence so that America can maintain its position as a leader in the space. And in many ways, the physical infrastructure for artificial intelligence, the compute, the clusters, that is going to define our ability to lead within this space.
The need to scale energy infrastructure. Katie, how great is that need?
Yeah, the pace of builds needed to ramp up the amount of power that we're talking about here is in the gigawatts, right? And this is the kind of challenge that we were facing already with regard to replacing fossil fuel sources in the United States, is in the many tens or hundreds of gigawatts by 2050. Add on to that the need to build more power for data centers, and you get a situation where, hundreds of new nuclear reactors need to be deployed, or, other hopefully clean energy technologies.
Right. Does the regulatory environment support that?
Yeah, the Nuclear Regulatory Commission has a number of activities focused on accelerating licensing. Now, I am a bit concerned about the way that the Trump administration has worked in the last few months to reduce its independence as a regulator. I'm increasingly concerned about recent actions being taken by the administration. A really strong, independent, well-funded, fully staffed regulator enables ensuring standards that are going to be met and that the public is being kept safe. And they can speed up their process for sure, but my understanding is they're working on it.
Katie, we've had many of the nuclear operators or would-be nuclear operators come on this program, particularly those that have relationships with technology companies. But when I look at their timelines, we're talking end of the decade, at least, to come online. But they argue nuclear is the only option. Solar, wind, other sources of renewable energy just won't cut it. Summarize your position on whether they're right or wrong.
Yeah, absolutely. You know, I think nuclear energy is extremely well suited to supporting AI and data centers and a number of other sort of critical infrastructure needs that we're going to have near term. You know, largely because of its reliability. It's on 24/7. It's scalable, right? It has a very small land footprint. And, you know, tech companies that have made clean energy commitments and climate commitments globally, these are global companies. They also value that nuclear energy is emissions free. And so it's extremely well suited. But those constructions have to be starting now in order to make it to the 2032, 2035 timelines that we're talking about, sort of gigawatts worth of expansion. You know, I know that a number of AI companies said yesterday that if there were those gigawatts ready to buy today, they would be buying them. Nuclear isn't there yet, but a number of nuclear builds are on the way.
Katie Huff of the University of Illinois, it's great to have you here on Bloomberg Tech. Thank you very much. Now, when it comes to powering AI data centers, the US facing a bottleneck. Katie just explained a bit of it there. At Bloomberg Green in Seattle yesterday, long-time, well-known Silicon Valley investor Vinod Khosla discussed the types of energy he thinks can fuel our future AI ambitions.
The change in demand is what has caused the problem. Now, NIMBYism like grid again is going to be a problem, but data centers don't need the grid. You can put the data center where the power source is. So I do think grid helps, but the demand problem is created by the projected increase in demand from AI data centers, which can be located near power sources.
Coming up, 19 Labs launches its first commercial drone flight, successfully delivering medicine in Guyana. We're going to speak with 19 Labs CEO Ram Fish. That's next. This is Bloomberg Tech. Nineteen Labs is taking telehealth to the skies. The company has launched its Gale Force drone, powered by Starlink and Nvidia AI, to autonomously deliver medicine and digital health toolkits. For more, I want to bring in 19 Labs CEO Ram Fish, who's with us here in San Francisco. So the first kind of case study or successful, should we call it a mission, is in Guyana. Yes. What did you achieve and why that nation in particular?
We've been working in Guyana for the last few years. The president and the government over there is very eager to use technology to improve the country and use the newfound money from gas to actually have a positive impact. So we've been building a public-private partnership with them for the last few years, bringing advanced technology, starting with telemedicine, and now launching the drone delivery of medication, and bringing back from those rural indigenous communities blood samples or other goods to the regional hospitals.
Can we talk a little bit about the technology? You know, I cover Nvidia very closely, and for a long time, Jensen Wong's been telling me about real-world AI and physical AI. You use Nvidia as a partner, but how does that work?
There are two technologies that are transforming what we can do in those remote places. Traditionally, you haven't been able to go there physically. Drone is changing this. And you haven't been able to communicate. Drones is changing this. The Nvidia piece comes on top of it, allows us to automate and monitor and perform drone operation in a much safer, more autonomous way. And that directly ties into the costs. And when you are dealing with the next 1 billion people in rural population, one of the major considerations is innovating at a cost point.
Right.
And that's why Nvidia is transformative here as well.
On the data side, or you have physical silicon inside of the...
We have physical silicon inside, right, because the AI is moving to the edge. So we actually have both the Starlink on the drone and the Nvidia on the drone to do real-time processing of what's happening on the drone so it can fly autonomously in a safer way.
That's astonishing. You know, Starlink is available in so many formats and mediums, you know, industrial scale, on airplanes, in the home. How did you negotiate with them to get a receiver locally onto the drone?
The Starlink Mini is kind of the smallest model of the Starlinks. Drones, you know, we're not talking about a DJI small drone. We are looking on something that's better be called unmanned aircraft. And these are just growing every year now. Like we can carry 25 pounds this year. By next we are looking at 150 pounds unmanned aircraft.
Right.
So yeah, you put a Starlink on it. And the moment you put Starlink, you completely transform how you can fly, because the pilot can sit, view the weather, view the physical location, monitor throughout the flight in
very low
real-time
latency.
HD, almost no latency, sits with a joystick. You know, in the past, those technologies have only been available for expensive military usage.
Right.
We believe in drones for good. And the Starlink has been able to enable us to transform this, put the Starlink on the drones, and offer those services.
Ram, in my study and research of you, I know you to be more kind of involved in the smartphone market historically, working at Apple, other OEMs. How did you get into drones?
Oh, I've always been into aviation since I was a kid. And if you think about a drone nowadays, a drone is no longer that much of a aero challenge or aerospace challenge. A drone is much more of a computer with sensor and motors and software and communications that you need to come together. Well, that's what I did at Apple. That's what I did in Samsung, leading digital health. And that's where I started when I built the first phone in the world, the browser in '95. It's building the hardware and the software together to create amazing products.
Just very quick, you know, Zipline's a company that we've covered on this program deeply. It's very analogous in many ways what you're doing. They've been able to scale in different markets. Do you see them as the main competitor? Do you try to emulate them?
I think they're absolutely a fantastic company, and they're doing amazing things. We try to take a slightly different approach than them. They are much more vertically integrated, and everything needs to be technology powered. We believe in achieving balance between what I call AI and AGI. There is a space to use humans in the operation of drones, especially in rural indigenous places. And being able to balance, you know, you can have local people charge the drones, unpack the drones, have it land in the communities. It also means that you empower and educate local people. So,
Ram Fish, 19 Labs CEO, thank you very much. We've got to get out to Washington, D.C. and Bloomberg's Katie Lyons and speak more about headlines that President Trump very likely to fire Fed Chair Powell. Kaylee, update me. What's the latest?
Yeah, Bloomberg is reporting this according to a White House official familiar with the matter, though they do caution, Ed, that no final decision has yet been made. But yes, it does seem that the president may be getting closer to the point where he makes the call to at least try to fire the Fed chair, Jerome Powell. And he spoke about this, we understand, with Republican lawmakers who were gathered at the White House Tuesday evening here in Washington. The New York Times, in fact, actually reporting that he waved in front of them a draft letter of his firing of Chairman Powell. So there certainly is an escalation in what has been an ongoing feud, if you will, at least one-sided feud between the Trump White House and the Fed chair, as the president has continually pushed the chair to lower rates substantially. The question is going to be whether or not, A, he does this, but also if he has the legal grounds to do so. When we actually look at the Federal Reserve Act, of course, a Fed governor can only be removed for cause. It's unclear exactly in terms of reading the law what it actually means to try to fire a Fed chairman, though, of course, as Fed chair, he is a Fed governor as well. And there's a question of to what extent this would be applicable to both of the titles that he holds. It also is a question of what exactly that cause would be, because simply not lowering interest rates isn't necessarily a justified cause, which is why we may have seen the administration putting continued focus on specifically the cost of the renovation to the Fed buildings here in Washington, suggesting that Powell may have lied to Congress about that. So this is a story where continuing to watch, and we may get more from President Trump on that in just a moment as he sits down with the Crown Prince and Prime Minister of Bahrain in the Oval Office, Ed.
We're also looking at the dollar, right? The biggest reaction to these headlines was in the dollar spot index. Of course, with the drop, the G10 currencies moving higher. We're now going to hear from President Trump in the White House alongside his counterpart from Bahrain.
I'd rather be the Prime Minister of the Crown Prince. I think I'd take the Crown Prince. And very importantly, your son, your beautiful son, who has a great reputation, you know that.
Thank you, Mr. President.
Great reputation as a smart, hardworking guy, so it's good to say hello to you. Congratulations. We've had a tremendous relationship, I have personally, with Bahrain over the years, and has been a fantastic ally. And anything they needed, we helped them, and anything we needed, they helped us. And we're going to be talking about a lot of different things, including the most perfect military maneuver that anybody's seen probably in 50 years, which took place a few weeks ago when Iran knocked out their entire potential nuclear capacity. And it was obliterated. You know, I used that term. They said, well, maybe that's too much. I said, no, it turned out it was more than obliterated. They can't go back. And we're just really going to talk about some things, including trade. We're going to be discussing trade. We do a lot of trading with Bahrain. And we're going to have lunch after this, but we'll take some questions. At first, I'd like to ask the Crown Prince to say a couple of words. And he also has a father who's living and well and doing fantastically, as I understand it.
He is.
And somebody who's respected all over the Middle East and all over the world. And thank you very much for being here.
Thank you, Mr. President. Thank you, one and all. It is indeed a great honor to be here on this fine morning to put into action the relationship that exists between our two countries. We will be discussing security issues, we'll be discussing trade and investment, which is very important. We're very happy to be announcing $17 billion worth of deals that are coming to the United States. And this is real. This isn't...
it's real money.
These aren't fake deals. These are real deals.
They don't have to borrow the money.
We don't have to borrow it. It's coming in. And it only builds upon a legacy that we're very proud of. We have had a relationship in the civil side between our two countries since 1893 and formally since 1948. So may it long continue, and we look forward to many, many more years of productive partnership. Thank you, Mr. President.
We will have
You
that.
honor us.
We will have that indeed. We'll have many good years, and I'd say right now is your top year, and we appreciate the investment. It's a great. We left, as you know, Saudi Arabia. We were just there in Saudi Arabia, and Qatar was so great. The leader was great. We had UAE, and we had a couple of other visits, but all great places, and we left with $5.1 trillion of investment, and they all want to be investing in the United States. Sure. We have, I think we have over $16 trillion of investment coming in, which is a record, and we're only a little bit into the year. And let's say the first 2 months, I sort of took it easy because we had to fix up the Oval Office. I had to devote my time to fixing it up, but now we had to fix up our country. So we have. I think everyone is saying we have the hottest country now anywhere in the world. We were dead a year ago. We are a dead country. And now we have the hottest country anywhere in the world. And it's a great honor to have you here.
Thank you, Mr. President.
Any questions?
On the developments in Syria at the moment.
Well, I can comment. I think I'll ask Marco to say a few words on Syria.
Yeah, it's complicated, obviously. These are historic, long-time rivalries between different groups in the southwest of Syria, Bedouins, the Druze community, and it led to an unfortunate situation and a misunderstanding, it looks like, between the Israeli side and the Syrian side. So we've been engaged with them all morning long and all night long with both sides, and we think we're on our way towards a real de-escalation and then hopefully get back on track in helping Syria build a country and arriving at a situation there in the Middle East is far more stable. So in the next few hours, we hope to see some real progress to end what you've been seeing over the last couple hours.
Mr. President, Jerome Powell, do you have plans, or if you're back considering firing Jerome Powell, and what's your justification if you're thinking about this to do this?
Too late. He's always been too late. Hence his nickname, Too Late. He should have cut interest rates a long time ago. Europe has cut him 10 times in the short period of time, and we cut him none. The only time he cut him was just before the election to try and help Kamala or Biden, whoever the hell it was, because nobody really knew. Obviously, that didn't work, but he tried to cut him for the Democrats, Kamala. And how did that work out? You'll tell me. It didn't work out too well, did it? But I think he does a terrible job. He's costing us a lot of money. And we fight through it. It's almost, the country's become so successful that it doesn't have a big impact. But it does hurt people wanting to get a mortgage. People want to buy a house.